right, today is Friday, August 5th, 2011, and you're watching CATEX News, daily news for the risk industry. In Syria, President Bashar al-Assad continues his violent crackdown on protesters demanding democracy. In the city of Hama, the Syrian army's tanks and snipers continue to kill, with the death toll in the past 3 days surpassing 180 lives. The UN Security Council has yet to pass a resolution condemning the violence in Syria, with Russia being the major holdout. Despite that, Russian President Dmitry Medvedev had a few choice words for Assad yesterday. Medvedev said that Assad faces, quote, a sad fate, end quote, if he does not establish a modern state and restore peace. Notice that Medvedev did not specifically ask Assad to resign. The United States is a bit more critical. Secretary of State Hillary Clinton has said that Assad has, quote, lost his legitimacy to govern. And it appears as though Clinton is calling for some kind of international military action. Yesterday, Clinton said that, quote, actions speak louder than words, end quote, and that the United States seeks international support for, quote, actions to send a very clear message to the Assad regime that there is a price to pay. It seems as though the Obama administration likes to take its time before using military action in the Middle East, as was the case in Libya, and time will tell what happens in Syria. Assad may be ramping up his murderous crackdown because he sees what's happening over in Egypt. Today is the third day that the former president of Egypt, Hosni Mubarak, will be sitting in a cage in a courtroom in Cairo as he and two of his sons stand trial for, corruption and murdering hundreds of his own people. Some cafes in Egypt, actually, were charging £2 Egyptian for patrons to watch the trial on TV, specifically on state TV. I'm not particularly familiar with Egyptian state media, but it seems a little ironic that what was once the mouthpiece of the Mubarak regime is now broadcasting his demise. In other news, a typhoon is set to hit mainland China sometime tomorrow. Typhoon Mubarak is moving across the Pacific after delivering heavy rain to the Philippines earlier this week. It is set to make landfall south of Shanghai. Currently, it has maximum sustained winds of 157 kilometers per hour. An orange alert for high waves has been issued in the East China Sea. In the same region, in financial news, the Hang Seng Index has dropped 4.7% earlier today. It seems as though fears from the U.S. stock market have migrated over to China. That fear is certainly shared by day traders in Japan. Early today, the Nekkei stock average has fallen 3.8%. The tech sector in Japan was hit particularly hard, with the price of shares of Elpida Memory Incorporated falling 6.2%, and Renesas Electronics Corporation shares fell 9.8% earlier today. Well, let's hope there's some good news to report on the markets on Monday. Yesterday, we reported that unemployment claims in the U.S. Fell a few thousand claims short of what was expected, so there's some good news. See yesterday's video for more information on that. The dip in China's market may be compounded by this next story, perhaps. Early today, an oil pipeline in Iran exploded. China gets a fair amount of its oil from Iran. There are no reports at the moment on whether or not anyone was injured. A spokesman for the Iranian National Oil Company said the cause of the explosion was still under investigation. The flames rose 130 feet into the sky, and this pipeline provides 4,000 barrels of oil a day to a nearby processing unit. This is the second major oil pipeline explosion that we've reported on CATEX News in the past couple of days. So I don't know if something's going on or if this is a regular thing. Maybe we'll find out. Now let's talk about what is going on specifically in the risk industry. These next three reports are based on reports from Insurance Day, which you can read online if you subscribe to it. Today, AIG posted $2.11 billion in income for the first half of the year, compared to a loss last year in the same time period of $873 million. So that's like a $3 billion increase. Wow, okay. The after-tax position was even better, with AIG booking a $3.31 billion gain. up from $1.43 billion in the first half of 2010. At the non-life division, Chartis, there was a pre-tax gain of $412 million, down from $2.36 billion in the first half of 2010, on net premiums written of $18 billion, up from $15 billion in 2010. The underwriting loss came up to about $2 billion, up from a loss of $350 million in the first half of 2010. AIG said that U.S. pricing has generally improved in the second quarter, driven by commercial property and workers' compensation. Investment income was up slightly, up to $2.3 billion, up from $2.2 billion in 2010. The combined ratio for the first half deteriorated from 111% from 102.3%. The entire improvement in AIG's bottom line can be explained by its income from discontinued operations net of tax. Over at Chartis, U.S. losses accounted for the majority of Chartis' $539 million catastrophe bill for the second quarter, but this AIG subsidiary still produced a healthy profit for the period of $828 million. According to Insurance Day, quote, the performance took Chartis' first half earnings back into the black after a loss-making first quarter and contributed to a first half pre-tax profit for the AIG Group as a whole of $1.8 billion for the quarter and $1.3 billion for the 6-month period. However, the underwriting results for Chartis remained in the red, and losses widened from a year ago to $353 million for the quarter and just shy of $2 billion for the half. Offsetting these losses were net investment income of $1.1 billion in the quarter and $2.3 billion in the half. With the second quarter catastrophe bill, $358 million was attributable to U.S. tornadoes and a further $84 million to other U.S. disasters such as floods and storms. An additional $58 million in losses was the result of the June aftershock in Christchurch, New Zealand. Chartis' first half catastrophe bill included $1.3 billion in costs from the Tohoku Japanese earthquake. Over in southern Europe, the Greek debt crisis seems to have taken a toll on Groupama, with Fitch Ratings having downgraded Groupama's financial strength rating to an A- from an A, with a negative outlook, citing the mutual insurer's continued exposure to the sovereign debt of southern European countries. Groupama, whose net exposure to Greek sovereign debt comes to 540 million euros, said Thursday its first half net profit had improved by 16% despite an 84 million euro impairment on its Greek debt holdings. And those three stories come from InsuranceDay.com. Well, that's all the news we have for today. Thank you for watching. Feel free to discuss this video and rate it and comment on it. And we'll see you on Monday. Have a nice weekend.